Okay, good morning, everyone. My name is Coach Welt. I'm privileged to have this section with you guys once more. We do this every Friday, technical analysis for beginners. Technical analysis for beginners using the two indicator tactics. With me here are my colleagues, Coach King, Dollar Queen, Coach Aminu, and every other coach yet to see here. Okay, it's my pleasure having you guys here. I've not started sharing my screen, please. It's my pleasure having you guys here, and I also want to use this opportunity to acknowledge our coaches, Coach Mo and Coach Salsi, for this privilege they've given to me once more. So without further ado, I'm going to proceed with sharing my screen for you guys to see what we have for the day. Please, if you can see my screen, I need the word 111, please, if you can see my screen. If you can see my screen, I need the word 111. 111 on the chart, okay? Please, if this is your first time of being in this call, I need the word 222. Or I need the word new on the chart. If this is your first time of being here, I need the word new on the chart. So this will enable me to know how I can communicate value to you to a point that you can understand. And take note, for those who are new on this call, we are not expecting you to understand everything here. Just pick up your writing materials, the little information you can get. It's only going to take time. It's consistency for you to understand all what we are doing here. Even those who have been here for some period of time, they are even yet to grasp everything. Not to talk of you that you're just coming for the first time. So kindly pay attention while I proceed. You're welcome once more to identify with us for those who are new on this call. Okay, as you guys can see, you see what the market is doing. Everywhere is on red. This is the 98 volatile coins. For those who are already members of Rqtmi, you have been hearing about the 98 volatile coins we advise you guys to stick to. And you can see what the market is doing. Everywhere is red. So in this situation, this is the market. You allow the market to do its thing. What goes down will definitely go up. What goes up will definitely come down. That is what people don't want to accept. You are not the only one trading in this market. There are millions of people trading in this market. And you cannot force them not to take profit when they want to take. You cannot force them not to sell when they want to sell. Just like you, when you sell, when your trade sells, nobody is forcing you not to take profit when you want to take profit. It's the same way. So when the selling pressure is higher than the buying pressure, this is what the market does. As soon as the buying pressure is higher than the selling pressure, this is what everywhere goes green again. So the most important thing now is for you to now understand how to approach the market. So rather than complaining, look for ways to build your strategy that will enable you. Okay, look at the 381 Binance currently. Let's 381 coins that Rqtmi trades on on Binance. So let's see how many of them are on green right now. See, it's not more than 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So the rest are on red. You are seeing it. So the market is down. All you need to do at this point is wait patiently. Wait patiently. That is all you need to do. The market will respond. Then if you have more capital, more funds you want to trade, you can still trade by analyzing the market. So the fact that the market is down does not mean you cannot trade. It is even better for you to buy more cheaper. So we can proceed with this now. So let's go to what we have for today. So for those of you who are new on this call, I will just use this. Sorry, I hope you guys can see my screen. Okay. Now, listen carefully. In Rqtmi Motion International, this is Royal Q business. Under the Royal Q business, there are different teams. And one of the teams you are with today is known as the Rqtmi Motion International. And we have our own style of trading and we have our own style of doing things. So the Rqtmi style of doing things is what I want to show to you guys and pay attention. So when it comes to technical analysis, we make use of two indicators. Number one, we make use of two indicators. So for those of you who are new here, TradingView, this is what you are seeing now. TradingView is what we use in analyzing the cryptocurrency market. So your TradingView, once you come on board, you are expected to have this TradingView, and you are expected to have it to be set up this way. Let it be set up this way. Then the two indicators you are going to set up is known as, one is the auto fib retracement. Don't mind my writing. Auto fib retracement. The second indicator is known as your MACD indicator. So MACD is known as moving average convergence divergence. That is how you're going to see. So this is where you can, if you are using your laptop, you can use this place, you can indicate it, indicator. So these are the indicators. It's loading. Okay, so these are the indicators. If you can see my screen, we have different indicators. Auto fib retracement. For now, we make use of two indicators, the auto fib retracement and the moving average convergence divergence. These are the indicators we make use. For you to effectively trade the crypto market, you need a combination of two or more indicators to pick a trade perfectly. So the two indicators we have decided to make use of is this auto fib retracement and moving average divergence. So once you have your TradingView downloaded and you upload all these coins, the next thing you have to do is to set up your indicators to be in this form. That is the next thing for you to do. So this is known as your moving average, that convergence divergence, which is your MACD. This down one is known as your MACD. So MACD is a combination of a blue line. Okay, let me use a blue line. This blue line is also a combination of Let me take it up a little. Good. It's a combination of this blue line, a blue line, a this is orange line, then you can, this line is green line, known as the zero line. So you can use any color on this line. Then you have a bar that shows you when it is bullish, green for bullish, and a bar that shows you when it is bearish, red for bearish. So the combination of all these lines, the blue line is known as the MACD line. This blue line is known as the MACD line. Then this orange line is known as the signal line. Take note of that. You might want to write this information down. Then this green line is known as the zero line. The zero line. So this green bars is the bullish bar, and why the red one is the bearish bar. So combination of all these makes up the moving average convergence divergence. So take note of that. So I will note that, how do we make use of this MACD? We need to know how we make use of this MACD. You make use of MACD within time frames. So you are going to make use of this MACD with time frames. Let me clear the charts. So this MACD that I just talked, you are going to be making use of it with these time frames. Take note of this. These are the time frames. We have the 1 minute time frames, 2 minute time frame, 3 minute time frame, 5 minute time frame, down to 1 month time frame. So, but in our own style of trading, we have the time frames we use in trading. We have the time frames, and the two time frames we use is the 15 minutes time frame and the 1 day time frame. Take note of that. 15 minutes time frame and the 1 day time frame. Now, 15 minutes time frame is known as your shorter time frame. It's known as your shorter time frame. Why the 1 day is known as longer time frame. Now, when using these two time frames, take note. There are things you want to see on your MACD on the 15 minute short time frame. There's a condition your MACD must meet on this 15 minutes short time frame for you to say yes, you can actually go ahead and trade this coin that I'm into. Then when you come to the 1 day, there's a condition you want to see on the 1 day, which we are going to talk about it. Having said that, when we want to analyze between these time frames, on the 15 minutes time frame, we have what we call, on that 15 minutes time frame, we have what we call entry 1 and entry 2. Now, because we don't trade every time, we have a particular time we send signal, and that particular time we send signal is twice in a day. It happens twice in a day, which we know as entry 1. Entry 1 is known as the London combat area. We call it the London combat area. Entry 2 is known as the New York combat area. Why do we decide to choose these two entries? Entry 1 is between the hour of 8 a.m. to 11 a.m. Please take note of this time. That is when you look for setup or signals on the London time frame or London combat area. Entry 2 is between 1 p.m. to 4 p.m. This is known as the New York combat area for entry 2. So why are we looking at these two entries? These entries are entries where there is high liquidity into the market. When we mean liquidity, we mean that billions of dollars are being injected by whales into the market at that time, and also billions of dollars is being taken out of the market at that time. So you as a retailer with small funds, You want to see how you can enter almost the same time with these people that are injecting money into the market and come out before they come out. So there you see that there is high volatility within that region, either up or down. So you need to understand these two entries. That is why we only trade within these two entries. Within these two entries. Please take note of that. Take note of that, please. Now, having said all these things, we need to show you how to do this on your charts. Now, remember I said that you need the help of two or more indicators for you to pick a trade perfectly, even if you are looking at these two entries. So the two indicators we are going to be using is MACD, which I just talked about. The next one is the auto Fibonacci retracement. The auto Fibonacci retracement, what does it look like? What does the auto Fibonacci retracement look like? The auto Fibonacci retracement on the 15 minutes, let's be on the 15 minutes since we are going to be using the 15 minutes. The auto Fibonacci, this is what it looks like. It is a series of numbers. So you have all these numbers are called Fibonacci numbers. So how do you auto Fibonacci trend, or when a pattern is telling us if this is an uptrend or a downtrend. So that is what auto Fibonacci tells you. Now, for you to know if it is an uptrend, anytime you have the auto Fibonacci number showing 100% at the bottom and 0% at the top, it is an uptrend. Please take note of that. Whenever you are seeing that the auto Fibonacci number, you are having 100% at the bottom, 0% at the top, this is an uptrend. Now, for a downtrend, it is the opposite. Let's see any other time frame that is giving us downtrend, please. Let's see. Good. Now, on the 1 hour, we can see that the trend is telling us that it is a downtrend. Why? Because anytime you see the auto Fibonacci number, that 0% is at the bottom, 100% is at the top, this is a downtrend. Take note of that. Take note of that. This is a downtrend. Now that you have been able to identify a downtrend and an uptrend on any time frame you have, now the issue is there's not a condition. For a downtrend, there must be a condition that must be met for a downtrend. Now, what is the condition? The condition that you want to see the current candle for a downtrend. Condition for a downtrend, you can write it like that. Condition for a downtrend is that you want to see the current candle. What is the current candle? These are the candles. Please take note, my candle color is different from the normal color you people know. Now, this black for me is known as my bullish candles. This is bearish candle rather. These are my bearish candle. The blacks are my bearish candle, while the blue sky and blue is my bullish candle. When I mean bearish candle is when the market is going down. Bullish is when the market is going up. So for some people, their bearish candle is red, while their bullish candle is green. Please don't get confused about that. Now, for a downtrend, I want to see the current candle. What is the current candle? Take note. I want to see this current candle for a downtrend to be on this 0% line, 0% line, or anywhere below the 0% line for a downtrend. Take note of that, please. Condition for a downtrend using auto Fibonacci on any time frame. or on the 15 minutes time frame, you want to see for a downtrend that the current candle is going to be on the 0% line or anywhere below the 0% line. Inversely, for an uptrend, what do you want to see? Like in this case, for an uptrend where you have 100% at the bottom, and 0% at the top, where do you want to see? This is an uptrend. Where do you want to see the current candle? First, you need to identify your current candle. This is your current candle. This is your current candle. So for a down uptrend, you want to see the current candle on this 50% line, like in this case, or anywhere below the 50% line for an uptrend. Take note, condition for an uptrend is you want to see the current candle on the 50% line or anywhere below the 50% line, like in this case right now. It is currently below the 50% line. So take note of that, please. Now, remember, I have just talked about how to use the auto Fibonacci. Now, how do you use the MACD? Now, for the MACD, for you to make use of the MACD, you want to make use of the MACD whenever you see it. So I'll give you a clearer picture of when you want to make use of the MACD. Now, you want to make use of the MACD in this case. Whenever you see the MACD line have crossed below, let's say the MACD line. Now, this is our zero line. Take note of this. So you want to see the MACD line, which is the blue line, and the signal line below the zero line. So anytime you see the MACD line and the signal line below the zero line, the next thing, what it means is that you are good to go. But like I said, you need the confirmation of auto Fibonacci to actually pick that trade. And remember that we are working between two entries, which I am going to talk about. So, but I'm just trying to explain how to use these two indicators individually, then combine them together to pick a trade perfectly. So I just talked about auto Fibonacci. Now I'm talking about MACD. How do you make use of your MACD? You want to see that your MACD line, which is the blue line, and the signal line is below the zero line. Now, once you see it that is below the zero line, it's a go ahead, but yet you have to do a check with your auto Fibonacci, meaning that your MACD and your auto Fibonacci should be speaking the same language. So once they are speaking the same language, it means that there is a setup. There's a setup. So now we are going to see how we can use this tool, knowing that this is how we use the MACD individually, and this is how we use the auto Fibonacci individually. Thereafter, we are now going to combine these two to see a setup and pick our trade within those two entries, entry 1 and entry 2. So I want to proceed. I believe I've explained how to use the individual indicators. Now we want to combine it together to pick a trade perfectly. So because right now, if you look at your time, this is 11:37 a.m. So meaning we cannot pick a live trade at this moment because it has gone beyond 8 a.m. and 11 a.m. So the next entry we are waiting for is 1 p.m. to 4 p.m. So because we are on a live section, we cannot wait for 1 p.m. So we have to do back testing. So back testing is simply what has happened in the past, in the previous days or previous weeks. So we are going to do back testing on that so that we can see. So for those of you who are using the paid version of TradingView, you can always go and practice. Then when you have built your confidence, you can then come on live trades and pick live trades. That is how to practice your technical analysis using these two indicators. Please take note. So I am going back to backtesting. Now, for those who are using paid version of this trading view, now currently, as at now, this is the live trade. This is a live trade that is going on. If you look at the time, this is 11:30 on this candle, but the time is 11:38 because this candle is on the 15 minutes candle, and each candle on the 15-minute candle forms every 15 minutes. That is the meaning. So I said we analyze between two times. This is 15 minutes and 1 day. This is our time frame that we work with. So now, when you visit your trading view and you look at a coin you want to analyze, for instance, we want to look at in ING USDT, for instance. Now, the first thing I will do, step one, the first thing is to come to 1 day. I will come to my 1 day. What am I looking at the 1 day? It's just simple. What I'm looking at is simple. So because I'm backtesting, what I'm looking at the current candle on that 1 day to be a bullish candle. I just want the current candle on that 1 day to be a bullish candle. What do I mean by bullish candle? This blue, sky blue, should I call it blue candle? Yes. Then your own can be green. So I want that day, because on 1 day, it means every candle on the 1 day forms for the next 24 hours. That is what it means. So if you look at this current candle is Friday 30th, it's going to form for the next 24 hours. Yesterday's candle was 29. It formed for 24 hours. Day before yesterday candle. So on the 1 day, every candle forms on each 24 hours. So right now, I'm going to do backtesting. So if you are using trading view and paid trading view, to backtest, you click on replay. Once you click on replay, it will bring up this at the bottom of your screen or your phone. Now, select bar. This is where you select each bar you want to cut. This is where you play. This is where you use your hand to play and pause. You can increase the speed of whatever you are trying to monitor. This is showing me that it is on 1 day time frame. Then you can either play and pause. This is where you play and pause. So that is how to use it. So having said this, let's see what we are going to do. Now, because I said I am backtesting, it means that I am going back to previous days to see what has happened in previous days using our analysis. So let's see what has happened in previous days. So I will go back a little. I'm going back to, let's say, this candle. Okay, this was 30th, 29th, 28th, 27, 26, 25. So I'll go to 24. Let me cut. So I'm going to cut out. Once you click on select bar, it will bring out this scissor like something. So I'm going to cut out 25th. So starting from 24th. Now let's assume that today is 24th. And I want to analyze this coin ING USDT. And today is 24th. So the first thing I will do is to come to 1 day. What am I looking at the 1 day? I want to ensure that the current candle on the 1 day is a bullish candle. I want to ensure that it is a bullish candle. Now, in this case, on the 1 day, it is a bullish candle. So all I need to do, because I am backtesting, please, if you are doing a live trade, you will not do this. Because I am backtesting, I will have to indicate this coin, because when I go to the 15 minutes, this candle, I have to put something to mark this candle so that I will be able to see it on the 15 minutes. 15 minutes. So to do that, I'll just put, to do that, I'll take an horizontal line, my horizontal line, and put on top of this candle. Let me thicken it so you guys can see it boldly. So this horizontal line will be on this candle. So I've been able to spot this. So, but if you are doing a live trade on that day, there is no need to put this candle, please. There's no need to put this horizontal line. This is a previous trade that has happened days back. So I'm trying to identify where this candle started on the 15 minutes, because on the 15 minutes, then after I identify the current candle to be bullish, I'll come to my 15 minutes. Now, on the 15 minutes, that candle I identified on the 15 minutes, this is the candle on the 15 minutes. So if you look at it, it is Saturday 24th, 1 a.m. So the crypto market starts by 1 a.m. every day. Every morning, 1 a.m., a new market is formed. So on that day, this was when the new market opened up on the 24th May 2025. So now, probably on that day, you were sleeping on that day. Now, I told you we have two entries. Now, let's assume on the 24th, 1 a.m., you were sleeping and you woke up around 7:45 in the morning. So let's trace. Every candle forms every 15 minutes. So the next candle is 1:15, 1:30, 1:45. That's it. Fast forward to when you have 7:45. Let's see 7:45. So I'll cut that place. 7:45. Okay, good. So you woke up by 7:45 on that day in the morning, and this was where you met the market. So because you have an entering point, you don't just pick trade, you have dedicated time you trade, which is between your 8 a.m. to your 11 a.m. and your 1 p.m. to your 4 p.m. So what you had to do was you just have to come and map out that 8 a.m. So you woke up 7:45 and you immediately rush to map out your 8 a.m. 8 a.m., let me use another color on it. So 8 a.m. on that same day you woke up and you are mapping out your two entries to 11 a.m. 11 a.m. So this is your entry one. This is your entry one. Then the next entry is 1 p.m. You come and map 1 p.m. This is 1 p.m. Let me use another color for 1 p.m. You map out your 1 p.m. to 4 p.m. on this coin. So you can do this on multiple coins, different coins to monitor, so you can see a setup. You mustn't rely on one coin. So because you have mapped out your two entries, this entry one is your London time zone or London combat area, then entry two is your New York combat area. So we analyze between these two time frames. That is when we analyze. So you woke up 7:45, you have prepared your two entries. Now, like I said, you need a combination of two or more indicators. Now, looking at your auto Fibonacci, your auto Fibonacci is telling you, look at the numbers. If you have 0 at the bottom and you have 100 at the top, this is a downtrend. That is what your auto Fibonacci is telling you, that on the 15 minutes, it is a downtrend. Remember, on the one day, you did not make use of your indicators. The only thing you were looking at on the one day is if the current candle is a bullish candle. So once you have spotted that the current candle is a bullish candle, the next thing is to come to your 15 minutes. It is your 15 minutes you are going to make use of these two indicators. which is the auto Fibonacci. Auto Fibonacci, you want to know if it, as you have mapped your two entry, the next thing you look at, it is a downtrend because you have 0% at the bottom and 100% at the top. It is a downtrend. And we say for a downtrend, there's a condition for a downtrend. What is the condition? Since we have identified that this is a downtrend, the condition is that we want to see the current candle inside this entry one to be at the 0% line. So what we are focusing on is what is going to happen inside entry one and inside entry two. Anything outside of these two entries is none of our business. This is where we take our trades. Take note of that. This between 11 a.m. and 1 p.m. is a resting time that people go for break. They go for break. So that is why we don't trade on this resting time. So between entry one and entry two, that is where you are looking for your setup. Take note of that. Now that you have spotted that this is a downtrend because you saw 0% at the bottom and 100% at the top. Now the question now is, where do you want to see the current candle inside entry one? Since it's a downtrend, you want to see the current candle on this 0% line for a downtrend, or anywhere below the 0% line. That is what you want to see. So when you see the current candle on the 0% line or anywhere below the 0% line, is not enough. Your MACD need to be saying the same thing. And what do you expect your MACD to be saying at that point? You want to see your MACD line, which is the blue line, and the signal line. They must have crossed the zero line. So when these two situations are happening, you are seeing your MACD line, the blue line, and the signal line have crossed the zero line, this zero line. And you are now seeing that on your first entry, you are seeing that your current candle is on the 0% line or anywhere below the 0% line. That is the setup we are looking for. Take note. It is when these two indicators are speaking the same language, you can then pull the trigger. You can pull the trigger, please. Now, because of how the Rqtmi template is, which allows for margin calls for days like this, that we have coins that are deep, some persons are still making money because they made use of default settings, where they opened margin calls, and they are making money downtrend even when the market is down. This is why we advise people that if you are trading on two coins, please leave one on default settings, leave one on put 30s. If you are trading 4 coins, leave 2 on default settings, leave 2 on both 30s. If you are trading 3 coins, if you are a patient person, very patient person, you can leave 1 on default settings and leave 2 on put 30s. But if you are not a patient person, leave 2 on default settings and leave 1 on put 30s. So this is our risk management. And this is the reason why we tell you for days like this that the market goes down, you will be seeing subset. So a lot of people have been posting subset, downtrend. They are making money downtrend. But people who are not making money at the moment are people that made use, put all their coins on bull 30s. So you just have to be patient. As soon as the price retraces back upward, it will sell off and give you your profit. But for you that you have applied risk management by putting some of your coin on default settings and some on bull 30s, you will see subset, a lot of subset. The current coin going on Pudex, I know of someone that I've seen crazy subset on Pudex, is even appreciating default settings. That default setting is a blessing. That was what the person was telling me. So follow simple instruction when you are on this call, when you come on board, and you will never go wrong. We are telling you this based on experience. This market is heavily manipulated by the whales. So you can only come up with strategies and risk management that can help you survive in the space. So follow simple instruction, please. So having said this, going back to what we are going to do today. So I want to play this thing, test, run this, and you guys should see what is going to happen. Now, you are looking at one thing. So since we have confirmed that the auto Fibonacci is a downtrend and we want to see the current candle inside this entry one to be on the 0% line, alongside we want to see our MACD line and our signal line below the 0 line. It is in this condition we can now say we have seen a setup and we are good to pick our trade within this time zone. So let's do a back testing and see. So now currently we are yet to enter into the entry one, the London combat area. So just few minutes to the London combat area. So let's see what is going to happen here. Let's see what is going to happen here. I hope you guys can see my screen clearly. So I'll play gradually. Now we just got into the touch line, which is 8 a.m. So look at the position of the current candle. And the trend is still telling us that it is a downtrend. The trend is still telling us, showing us that it is a downtrend. Please take note of that. And your MACD line and your signal line is still above the 0 line. So let's continue. So you see your MACD line is approaching the 0 line. The current candle is also coming down. And now you will observe what has happened to the trend. Look at your auto Fibonacci. You will see that you are the numbers 100% is now at the bottom. So there's a switch of trend right now. 100% at the bottom, take note, and 0% at the top. Now, this is now an uptrend. There's a switch of trend. Now, for an uptrend, where do you want to see the current candle? You want to see the current candle on the 50% line. This 50% line. Since it's an uptrend, it has switched to uptrend. Or anywhere below the 50% line. That is where you want to see it for an uptrend. So now that there is a switch of trend, now your mindset have changed that, okay, trend has switched from downtrend to uptrend. You want to see the current candle on the 50% line. So let's go. So trend has changed back to a downtrend. Now look at it, the trend have changed back to a downtrend. So there's a switch in trends. Now you have 0% at the bottom, 100% at the top. It means it has changed, it has switched over to a downtrend. So for a downtrend, you want to see the current candle on the 0% line or anywhere below the 0% line. So let's continue. Now, you see that on the first entry, which is the entry one, we did not see setup. Why? Even when the auto Fibonacci is telling us that it is a downtrend, the current candle is not on the 0% line yet. And also your MACD line and your signal line have not crossed the 0 line to meet up the condition. So in the first entry, we did not see a setup. So we are entering into our resting time. So let's see what happened on the resting time. We are not interested in this resting time. Now we are about entering into entry 2, which is the New York combat area. So now before you enter entry 2, you look at the trend. The trend has changed also to an uptrend. So when you have 100% at the bottom, 0% at the top, this is an uptrend. So where do you want to see the current candle? You want to see the current candle on the 50% line for an uptrend. as well as your your MACD line and your signal line should be below the zero line for you to pull a trigger. So let's see if we can see that setup. So we are approaching the London combat area, the New York combat area. So you see it's going up. So now, at the moment, you will find out that your current candle came down below the 50% line. But yet, your MACD line and your signal line has refused to come down below the zero line. So in this case, you are yet to see a setup. Even if the auto Fibonacci is telling you that yes, your current candle is on the line you're anticipating, but your MACD needs to be speaking the same language. So if you look at the MACD line, it's trying to approach, let's say, you see, it has come, if you look at your signal, your auto Fibonacci, it has come below the 50% line and even went up back. But because your MACD line and your signal line has refused to come below the 0% line, you have not seen a setup yet. It has gone up again. So you see, we are at the end of the what they call it now. We are at the end of the entry two, which is the New York combat area. We did not see a setup. Not because your auto Fibonacci didn't, the current candle never came down to the 50% line, but because your MACD was not speaking the same language with your auto Fibonacci, meaning there was no setup. So that is just the idea. So let's do another one. So meaning that is why I told you guys earlier, when you want to do this, you need 2 to 3 coins you need to monitor this way, because you might end up not seeing a setup in one. But there's no how you take 3 to 2 coins and 3 to 4 coins to monitor that at least you're not going to see a setup on one of them. And if you watch on this entry, you will see the way the candles are flying up and down, up and down. It shows you that there is high volatility movement up and down, up and down. So if we had seen a setup, doing 3% will be very easy because there's high movement, volatility, up, down, up, down. So you see the way the candles are going. So people are injecting money and people are taking money out of the market. So you need to take advantage and enter at the right time and take your own share, then come out of the market. So let's do another one more example. Let's look at, please, anybody have if you have a question, drop it on the chat. After the section, we can attempt to do that question. So let's look at another example. So let's look at a coin called, you can also suggest a coin for us to look at. Let's look at a coin called, okay, let me check from one of the signals I sent earlier so that we can, instead of wasting time, we can see. Okay, let's look at Avas. Avas. I'll search for the name Avas. Avas USDT. Okay, this is Avas. Now, I told you, once you want to analyze a coin, the first thing you need to do is go to the 1 day. You want to check on the 1 day if the current candle is a bullish candle. If it's a bullish candle. So I am going on the 1 day. You can see it. This analysis I did, and it hits the 3%. So I'm going back to this. Okay, 2% here. I'm going back to this. Let's look at it. So because I am backtesting, I cannot take a live trade because we are not on that entry. Please take note of that. So I'll go to the previous days. So I'm going to take 12th of this month. 12th of this month. Okay, yes. Which was a signal I drew 12th of this month. So because I'm backtesting, I'll cut it. So let's assume today was 12, and this was the current candle on the day 12. This candle, look at it on the day. So because I'm backtesting, I'll just put my horizontal line, a vertical line on top of this candle to the 15 minutes. I want to be able to trace this candle on the 15 minutes because every candle on the 15 minutes form every 15 minutes. So if I cannot identify this candle, it will be difficult for me to know where the market starts from on that 15 minutes. So that is why I'm putting the line here. So when I get to the 15 minutes, it tells me that vertical line shows me the candle where the market starts from on that 15 minutes that day, which is you are seeing it Monday 12, 1 a.m. in the morning. So as at this 1 a.m., you were still sleeping. So let's assume you woke up around 7:45 was when you woke up. Probably you were conscious of the fact that you have to pick a trade and you woke up 7:45. Now, as at 7:45 you woke up, this was where the market was that Monday. So immediately you wanted to spot out your two entry, which is your entry 1, 8 a.m. to 8 a.m. to 11 a.m. So let's use another color to 11 a.m. This is your first entry. Take note of that, please. Your first entry. Take note of that. Then the next entry is the entry 2, which is your New York combat area, 1 p.m. to, let me change the color to orange, 1 p.m. to 4 p.m. Good. Now, you have spot out your two entries. Now, the next thing you need to look out for is, let me bring out this boldly. The next thing you need to look out for is it an uptrend or a downtrend currently? 100% at the bottom, 0% at the top. It is an uptrend. So for an uptrend, when you want to see the current candle on this 50% line or anywhere below the 50% line, that is where you want to see your current candle inside the entry 1 and entry 2, since it's an uptrend. And if you see that condition that the current candle is on the 50% line or below the 50% line, it must speak the same language with your MACD indicator. So what is the language? You want to see your MACD indicator, which is the MACD line, the blue line, and the signal line. You want to see both lines below the 0 line for you to pull a trigger. That is where you can say there is a setup form. So let's see if we can see that. So I'm playing backtesting. We call it backtesting. The market is going up. Look at it. Up. Coming down back. It's coming down. It's still an uptrend. It's still an uptrend. Coming down back. Coming down back. So we just got to the end of the entry one, and we are yet to see a setup. And if you look at the end of the entry one, the trend has changed. We are now seeing a downtrend. The downtrend is saying that zero is at the bottom, zero at the bottom, and 100 at the top. This is not a downtrend. For a downtrend, you want to see the current candle below the 0% line. So currently, as at 11 a.m., the current candle was below the 0% line, which proves to be a setup. But we have to also consider our MACD. It is yet to come below the zero line. For that reason, it is not a setup because the two indicators are not speaking the same language. They are not speaking the same language. So for that reason, we have to see what is going to happen on the other entry too. So we are going to the resting period between 11 a.m. and 1 p.m. So let me fast forward. So back now, we just got to the second entry at exactly 1 p.m. Now, at exactly 1 p.m., you are seeing that your MACD line has crossed below the zero line, but the signal line is yet to cross below the zero line. So let's see what happens, further reactions in the market within the entry two. Further reaction. So right now, you see that within the entry two, the market is telling you that this is a downtrend. For a downtrend, you want to see the current candle on the 0% line, which the current candle is already below the 0% line. Then you want to see your MACD line below the zero line, and you want to see your signal line also descending. Now, right now, you can say that there is a setup because already, if you look at, you can say there is a setup. Look at. If you trace your MACD line, let me trace it, this blue line, you see it's saying that minus 0.06. If you trace your signal line is saying minus 0.01, which it has exceeded the point. So at that point, you can say you have seen a setup and you can choose to pull a trigger. You can also wait for further information. At this point, you can choose to pull a trigger. So let's see if we pull a trigger here or we want it to come down more. So if I'm pulling a trigger here, this is what it's going to look like. I will put my entry point at this price. This price is 25.41. Let me use black color. So this becomes my entry point. This was where I entered the trade. 25.41 was when I entered the trade. 21. Then this becomes my, I use black color, my entry point. Then I will not take my measurement. If you are trading within this time frame, you can take 3%, please. You can take 3%. Remember, we told you that when using MACD automation, do not take more than 3% take profit, please. Do not take more than 3% take profit, please. So once you have seen this condition, you can pull a trigger and take your 3%. But me, I like seeing further reactions first before I conclude. Now, what do I mean by I like seeing further reactions before I conclude? On the first entry, the market just started. On the second entry, rather, you are just seeing three candles. You are just seeing three candles. there can be further reactions. So I like seeing more reactions before I conclude. So let's see more reactions. So you see what I'm saying? Me, I like seeing more reactions. So now that I waited for more reaction, if I had entered here, what would have happened is, if I had entered at this first place, by now it would have been buying more margin calls for you because the market is going down. But because I love seeing more reactions, I don't just enter immediately. I love seeing more reactions. So you see that what has happened here, you see that your MACD line, look at your MACD line has gone below the 0% line. Is even pointing down, indicating that that market will go down more further. So what I want to do is, at this point, I'm going to peak at this point. This becomes my entering point. Before the end of that entering two, I saw a setup because the MACD line is down, and the signal line are down. So that initial part, that initial place I wanted to pick, you see that they are yet to come, they just came down slightly. So I wanted to see more reaction for it to come down more, because I knew it to come down more. So I wanted it to come down more. So that was what I did. So I now saw a setup that right now the current candle is on the 0% line because it is a downtrend. So anytime we have a downtrend, we want the current candle to be on the 0% line. So now I will take my entry here. My entry price becomes 24.89. This is my entry price, 24.89. Then I'll take my 3%. So on this place, you can take 3%, 4%, 5%, but we advise you to take 3% to come out of the market faster, because the only time you can take 5%, 10% is when you understand the advanced way of trading, which is smart money concept. Because these guys that are injecting money here, there's a point they want to come out of the market. And if you are not able to spot out that point, you might get stuck or trapped by their manipulation. So for you not to get stuck or trapped by their manipulation, you have to come out fast by just not being greedy. Just take your 3% and you are out of the trade before they come out. So we advise you take 3%. But if you learn the advanced way, the smart money concept, you can take 4%, 5%, 10%, because you have been able to spot out where they plan to liquidate the market. So that is why we say take 3%. It's not as if within this time frame you cannot take more than 3%. This is the reason why we are telling you that. So this becomes 3%. This becomes my exit point. So this 24.90 becomes my exit point, my entry point. Why I'm going to come out of this trade at 25.66. That's the meaning. So let's look at when we entered this market. When was the time we entered this market? So I want to spot the time we entered this market. Let's use another color so you guys can know when we entered the market. Okay, look at when we entered the market at exactly 3:45 p.m. 3:45 p.m. was when we saw setup. So what is the setup we are talking about? The setup is your auto Fibonacci is now speaking the same language with your MACD. What is the language? First, you want to see that if your auto Fibonacci is a downtrend or an uptrend, in this case is a downtrend, you want to see the current candle on the 0% line or anywhere below the 0% line. So in this case, the current candle is now on the 0% line. Then at the same time, your auto Fibonacci, the MACD line and the signal line should be below the 0 line. Right now, it is below the 0 line. So at this point, you cannot say this is a setup. you can then pull a trigger. Then how do you pull point when you are going to enter into the market? Price, preset price is the entering point we are talking about. Then you take your 3% using your price gauge upward. I hope you guys are still seeing my screen. There's some sort of network. Can you see my screen, please? Can you see my screen? I need a response on the chat if you can see my screen.
Yes, coach, you can see your screen.
Thank you. My system is trying to respond. Okay, it has responded. Okay, good. So now you can say there's a setup here. Now, since there's a setup, is for you to take your entering point, measure your 3%, which is your exit point. So let's see when we enter the trade was that same Monday, 3:45 was when we saw a setup, and let's pull the trigger. We have pulled the trigger. Let's see what's going to happen when we are going to come out of the market, please. So I'm pulling the trigger at this moment now. Let's watch what is going to happen. So I'll play it fast. Oh, wow, what is happening? Okay. Let me play it now. I'm trying to play it. My trading view is messing up. Okay, let me play it with my hand. Okay, let's go. Please, my trading view is why is this happening? Someone said it's seeing only Zoom. Okay, let me unshare. Let me share again. Can you see my screen now? Can you see my screen now? Dollar Queen, unmute yourself, please. Okay.
No, the screen is just showing Zoom.
Okay. Let me stop sharing and share again. I don't know what's screen now.
Coach,
Please,
can
if you
you
can
hear
see.
me? Coach,
Yes,
can you hear me?
Yeah, I can hear you.
I can see the screen, but on the up, it's two people that is sharing screen. That is why Summers TI is sharing his own screen. TI screen is being shared. Your own, yeah. I don't know who is this TI that is sharing his own screen. That is what they are seeing. They are seeing TI screen.
Okay, let me see what is happening.
Okay.
TI. Who is this TI?
I don't know who is this TI. The person is sharing his screen. Please, Mr. TI, he's even on this call. Please unshare your screen. Two people can't be sharing screen at the same time. He's on this call.
Did he come to? I'll kick him out.
Mr.
Coach, I think
TI,
you should
please.
share again because before your screen was showing before you unshared.
Okay. Is my screen showing now?
Yes.
Okay. I just kicked him out. So, okay. Let me continue. So, I'll need to play. God, I don't know why my trading view just. Okay. I think I should. let me reload my trading view again. What the hell? Can you still see my screen?
Yes, yes, we can.
So it has taken me back. So let me just rush and do the setup. Okay, I'm still on it. Okay. Okay. So this is where we are. 3%. We have spot 3%. Let's see if okay, it's playing now. Okay. I'm playing it now. See, it's coming down. It's buying more margin call at this point. It's buying more margin call at this point for you. So that is why the Rqtmi template allows for margin calls, because the market will always come down. So when it's coming down, it's using that advantage to buy more margin calls for you. So if you see what is happening recently, even when we brought out the MACD automation for you to avoid floating loss, there are days that the market can be heavily manipulated, like what we are seeing now. So even the MACD automation could not even save you from floating loss. So it makes you to understand that floating loss is inevitable when it comes to cryptocurrency. The market must always go down. We always go down at some point. So what is going to help you that time now is the margin calls that you have opened and your default settings that you are using that will help you. So while you are waiting when the market is down, you are going to be seeing success. So you look at the market came down, bought margin calls. As the market is going up, is selling at that different levels that is bought to give you your profit. Subset. So what is happening here is buying more margin calls. As it's going up, it's giving you, it's selling, giving you subset across those levels that it has bought. So that is why it is important for you to allow for margin calls. So if you are using MACD automation and you did not open margin calls, by now you would have been on a serious floating loss. So, however, we always look for a way to mitigate it. Floating loss cannot be eradicated. It can only be minimized. The earlier you know, the better you accept this truth. The earlier you accept this truth, the better for you. So it's coming down again. It's buying more margin call. It's buying more margin call. It's buying more margin calls. Let me fast forward it. Let me increase the speed, 3%. So it's buying more margin calls. It's selling at this point that is going up, retracing back. Is selling across those margin calls and be making money for you. Subset. Now is now on floating profits. It has hit your trigger price. So let me pause. So at this point, it hits your trigger price. So let's see when you came out of the trade. At this point was when it hit your trigger price. Let's see when it came out of the trade. So it will interest you that some persons came out earlier than this time, because the more margin calls it buys for you, the faster it takes you out of the market, because your take profit trigger price will become closer, more closer to your average price. So the more it buys for you, the faster it takes you out of the market. So if you were supposed to come out at 2.566, some persons will come out before this 2.566 because it bought more margin calls for them. And the more margin call it is buying, it is reducing the rate at which you are going to stay long in the market. This is what people don't understand. This is what people don't understand. So floating loss, as it's buying margin cost, is reducing the percentage of your floating loss, thereby taking you out of the market faster. So take note, floating loss cannot be eradicated in the crypto market. What goes up will come down. Sometimes it can be manipulated heavily and the market will go down. No matter the strategy you are using, you are still going to experience floating loss. The best you can do is to mitigate it or reduce it or minimize it, which is why we are coming up with strategies and using indicators that can help us do that. But it's not 100% guaranteed that you are not going to experience floating loss. Take note of that. So at this point, let's see when you came out of the trade. You came out of the trade the following day as at 11 and 8:15 p.m. in the evening, 8:15 p.m. in the evening, which is about 1 hour plus. 1 day and some hours. That was when you came out of the trade. Now, between when you enter the trade and when you came out, you see that there is, if you have used default settings, as the market comes like this, it buys more margin cost. As it goes up, like it sells across those levels, giving you subs and money downtrend. It comes down again, buys more margin call. As it's going up, it's selling across and be giving you subset. It comes down again, go up again, come down again before it finally went to its take profit. So between this point and this point, you have made money downtrend. Between this point and this point, you have made money downtrend. Then till now went up and sell the trade finally and gave you your profits. So that is our template. That is how the template, the Excel sheet template, is designed to work for you. It's designed to work for you because we understand based on experience that floating loss can never be eradicated. It can only be minimized, mitigated. That is why we design the Excel sheet in a way that while the market is down, while you are waiting, if you are using default settings, you'll be seeing subset downtrend. So take note of that. I believe this is clearly understood. So let's go to questions and answers. Let me see your questions on the chat. But before I proceed, if this is clear, I need the word clear on the chat. If you have gotten value from this section, I need the word clear. If you have gotten value from this section, I need the word clear. Okay, I can see a good, reasonable number of clear on the chat, meaning a lot of persons understood. So if you are new on this call, if you are here to understand, it's understood. Yes, it's accepted. All you need to do is to be consistent. Show up and you will know how to do this. But however, showing up and learning this thing, for you to actually master it or know it, you have to be, there's what you call on-the-job training. You have to be part of the team. You have to be doing this thing practically with your hand, and it becomes a norm for you. So that is how it is. So if you are yet to sign up your, activate your Rqtmi bot, this will be the best time for you to do that, because of the fact that we are learning real skill. Unlike the Ponzi scheme, they will tell you they are trading. You have not seen them trade before. But yeah, you are doing it yourself. You are analyzing the chart yourself. So please sign up. So let's see your questions. Bring your questions in. And if there's anybody that want to ask verbally, you co-host, you can unmute them. I think I can see one question. Please, who is TI? Okay, thank you, King Kazim. I don't know if that guy wants to distract us, but those of us on the call, carefully check, you realize it's two screen. Okay, thank you, Coach Kazim. Okay, so any other question? So what happens? Queen Kate said, what happens when the margin call switches off? Now, for instance, if you are making use of, let's say you are making use of magic, you are making use of magic 3 that covers for 7 margin calls. Magic 3 is minimum of $100. And your robot has bought from the first call to the 7th call. So it means your entire $100 have been exhausted across the 7 calls. At that point, your margin call limit will be switched off. So when it's switched off, what it tells you is that you have exhausted the number of margin calls. Then sometimes it might not be the case that it has bought across the 7 call, based on the fact that you did not use your money very well, or you are making use of book tactics. Book tactics is from you lock it at 5th call, you just buy from 1 to 1st and 4th call. So it has used your $100 from the 1st call to the 4th call, and the coin is still going down. There's no money to buy 5th call any longer. It will switch off the margin call as well. So in these 2 cases, you can experience your margin call being switched off. So case 1 is when your $100 I will come to that. When your $100 has been exhausted across the 7 margin calls, if you are using $100, if you are using 520, the number of margin call is 24. When your 520 have been exhausted across the 24 margin calls, you will experience switch off margin calls. That is when your margin calls will switch off. If you are using 320, when your 320 have been exhausted across the 20 margin calls, you can experience switch off margin calls. Another case you can also experience switch off margin call is when you say that you are using boot tactics and you put your $100, you say 100% of your capital, you want it to enter from the 1st call to the 4th call. You are not interested in 5th call. And by the time your $100 have been spread from 1st call to the 4th call, you have used all your capital, and the trade is still going down. So the trade, once the trade gets to the point it will buy the 5th call, the robot wants to trigger it to buy the 5th call. Because there is no sufficient funds, it will trigger and tell you insufficient funds. At that point, your margin call will be switched off. So now these are the 2 cases you will see that your margin call is switched off. So in a case where your margin call is switched off, if it is a case of it has exhausted the entire margin calls, wait patiently. If you don't have another funds, just wait patiently. As soon as the price starts going up, it starts selling across that 7 margin calls or 24 margin calls or the 20 margin calls and start giving you subset. But if you have more capital, you can open more margin calls. You can open more margin call either using Magic 1, Magic 1 and Magic 3. No, sorry, Magic 1 and Magic 2 is the best magic to use in opening more margin calls. And I will show you guys how to open more margin calls. So how do I show you guys how to open more margin calls? Now, if you go to the Excel sheet template, let's assume that, let me share my Excel sheet template. Let's see if you can see it. So let's assume someone who was using Magic 1 and your entire 320 has been spread from 1st call to the 20th call, and the price is still going down, meaning it has dipped by 30% dip, and the price is still going down. You want to open more margin call at this point, because right now your robot has switched off your margin calls. So for you to open more margin call, you can either use this same template to open more margin calls. How do you do it? All you need to do is you go to your margin configuration where you have this. Let me share my screen if you guys are seeing this. Sorry. Are you seeing my phone? Are you guys seeing my phone? Dollar Queen, please, if you are seeing my phone, let me know. Nino, who is here, please? Okay, thank you, King Mohammed. Now, let's assume I'm on a trade like this trade, and let me open my Rqtmi, and I've exhausted my margin calls. Everything is switched off. My network is trying to come on. Because of time, we need to. Please let my network, let me on my VPN. Okay, now let's assume now the whole of this, I'm on this trade and the margin call has been exhausted. Okay. If people are not seeing my screen, what's happening here now? I just want to show you guys how to do manual replenish. Sorry. My screen that was showing just now. Let me share again. Okay. Now, let's assume that I'm on this trade and the margin call has been switched off like this. We have our margin call switched off like this. What it means is that my margin call has been switched off. This margin call has been switched off like this. So what
Coach,
it means
please
that,
don't be offended though. Clear all these things you wrote here so they will see it clearly. All this
let's assume
write-up.
that the margin call has been switched off like this. So what it means is that it is either I have exhausted all my money from first call to fourth call. I've told the robot I'm not interested in the fifth call. So when the price comes down to buy fifth call, there is no more money for it to buy. So as soon as the robot triggers to buy, it will say insufficient fund, and my margin call will be switched off. Then another case is if I'm using default settings, another way your margin call will be switched off if it has bought from, like in this case, I'm using Magic 5, which covers from first call to the 24th call. Let's say the entire money year have been spread from first call to the 24th call, and the market is still going down, and I have a reason I want to open more margin call. More margin call means I want to open from 25, 26, 27 continuously. So for me to do that, I need to use Magic 1 template or Magic 2 templates. Magic 1 template is 320. Magic 2 template is 520. So if 525. So the best Magic template to use to open margin calls is either Magic 1 or Magic 2 if you have the capital to do that. Now you are opening more margin call. How do you do this? You just need to come to your margin configuration, click on your settings, your trade settings, please, this is very important for people who want to open more margin call. If you are experiencing this, you come to your trade settings, click on trade settings here. Once you click on trade settings, the next thing you do is you go to margin configuration. You open your margin configuration. This is your margin configuration. So already initially your margin call limit is 24. So you are using 320, you want to open more margin call. So 320 is 24 plus another 20, because for 320 margin call is up to 20 limit. So plus another 20 is going to open, that is 44. So you will change your margin call limit to 44. So all you need to do is come to your margin call limit, change it to 44. Once you change it to 44, if you open your margin call drop, you will now see that your margin call drop has been extended from 20. Now, you stop at 24. Now, I'm using Magic 5. Magic 5 stopped at 24. This was where it has stopped. So it has bought with all my money to the 24th call, and my switch off margin call has been switched off. So your plan is to open more margin call so that it will continue buying, because the market is going down, so that you'll be seeing subset here, additional subset. So you decided to use template 1, Magic 1 template, which is 320, which covers for margin call of up to 20. So now that you have added 24 plus 20, you've gone to change your margin call limit to 44. Now it has opened up another 25, 26, down to 24, like you are seeing now, down to 44. So all you need to do is, because you are using Magic 1 template, you go back to your Excel sheet template. Are you guys seeing my Excel sheet template? Dollar Queen, respond to me, please. Anybody respond to me if you've seen the Excel sheet template.
Yes, we can see it.
You come back to the Excel sheet template and you start.
Coach,
now.
Can you hear me?
Yes, I can hear you. What happened? Hello, can you see my template? Can you see my Excel sheet template?
Yes, we can see your Excel sheet template. Yes.
So now, once you come to your Excel sheet template, you now start computing this from 25th now. From the 25th call, first call is 0.2. So you start putting this 0.2 on the 25th, 26th, 0.5, 0.2, 0.5, down to the 44. The same thing, you come to the multiple buying ratio from 25th, you start putting 0.3, 1.2, 0.3, 1.2, down to the 44, which is like this. Going back again to now, this is from that Excel sheet template, you come to 25th. You come to the 25th and you start putting 0.2, 0.5 from the Excel sheet, 0.2, 0.5 down to the 44 using the Magic 1 template. Then you go to the multiple buying ratio, do the same thing. Once you finish, you click on save, you click on confirm. Once you click on confirm, you click on save. Once you click on save, as far as you have the money on that, you have that 320 inside your trade, the rubber will start buying from the 25th, 26th, and you start enjoying subset across that level again. So that is how to solve the problem of switch off margin calls. But if you don't have, then once you do that, you own the margin call, it will continue to start buying. Then if you don't have any extra capital, just wait patiently. As the price start going up, it starts selling and giving you your profit. I hope this is clear. So this is how to open more margin calls. I hope this is clear. Please, if this is clear, I need on the chat clear. If this is clear. If this is clear, I need the word clear on the chat. Let me move to the next question. Queen Kate, you asked that question. If it is clear, please. Okay, that is good. So what's the next question? Who said something? Okay. Why didn't we pull the trigger within the second time frame, 1 p.m. to 4 p.m.? Which second time frame? It was in the second time frame we pulled that trigger. Second time frame, 1 p.m. to 4 p.m. That is when we pull the trigger. Please look at my screen again. Look at my screen. This was where we pulled the trigger. Are you referring to the where I put the price range? Take the price range back to the box. If this is your challenge, take it back to this box. This was where we enter the price. Take note. If this is what you are referring to, see where we entered within this entry. See where we entered here. Please take note. That is, you can put your price range there and measure. Sorry about that. So it's between 1 p.m. to 4 p.m. So your price range will be on that line. So as far as this black line signifies your entry, it is still the same price as the same price you are entering. Take note of that, please. King Ola, I hope that is clear. If you are still on this call, I hope this is clear now. Which okay, let me see another question. So how can you mitigate it, any implication? Okay, I'll explain that. King Joseph, so if it's live trade, the 1 day candle must be bullish too in auto fib, just as it is when you are back testing. Exactly, please, King Joseph, exactly. You are looking for a bullish candle. Why are you looking for a bullish candle on the 1 day? Now, once you're able to spot out a bullish candle on the 1 day, it tells you that for the next 24 hours, that trend will be bullish. So the chances for you to come out faster. So if you pick a bearish candle, it tells you for the next 24 hours that the chances at the end of the day that market can come down, because the long time frame determines the outcome of the market at the end of the day. So 15 minutes is what can just happen. You just want to come out of the market faster. But within that one day, the market is, if the market is bullish, chances of eating any take profit that you put is high. So I hope that is clear, please. King Joseph, if your question has been answered properly, respond. Then King Ola is not here. So in the absence of no more questions, you guys how to react you for those who are new, but maybe next section I'm going to do that. So it is because of the question of this manual replenishment, how to open more margin call, which is a subject I wanted to create a very long time, but because someone have asked it, is a